Get your job confirmed now itself. You win, you already get a letter of confirmation. Job offer on hand. No need for you to worry about it. Then when you just go, you just like, here's my offer letter. It will be coming out, so I want you to keep an eye on it. I'll also keep an eye on it. Okay, make sure you go for it. I'll show you the video of the boy who win the prize. This boy is the one who win 5 times.
Is it from our uni?
No. Our uni tak dapat lah, but they did. One of our students did go for it lah. So then I now know what is the issues today, so I can help you all win.
Wow.
The issue is I help you win. Are you okay? Okay. I will try to help you win. Then I will polish your presentation, your style, your PowerPoint style, all that. You need to know how to do things properly. That's how we'll get it done. I know you have done PowerPoints and presentations before. I'm going to make you do it later on for this class also. Okay, because I need to polish you up so that you know how to do it properly. Okay, now you can join Toastmasters. you know there's a Toastmasters club. Please join. Anybody join already?
No.
I'm a Toastmaster. I won many awards. I go for championship. It's a championship, right?
Yes.
Toastmasters, they have competition. You can go up to US. The highest level is you go to US. You win in Malaysia, then you go for regional, then you can go to international. It's actually a competitive environment. Don't underestimate Toastmaster Club. It is an international grouping. And once you're in Toastmasters, you will definitely make connections. You will make connections, and you make the right connections. Okay. This will be Does that make sense? So branch income will not be taxable as manufacturers tax on territorial basis, not world scope. You know what the meaning of world scope and territorial basis, right? Okay, remember all this terminology you must keep in your head, because later on if you're going for any of this competition, you have to throw things like this. Okay? So it's territorial basis, not world scope. However, new law is when the money is remitted, it gets taxed. Okay, that's why I write it down there. However, should the branch profit be refunded back to Malaysia, this will be taxed in Malaysia. Okay, this is consistent with this idea I got tell you before. Got it? Accruing or derived from Malaysia and received in Malaysia from outside Malaysia. Okay, done. Now we're going to look at this idea called badges of trade. Still remember?
Yes.
Badges of trade.
Badges of trade.
What's the badges of trade? Make sure you remember the badges.
There's
8
like
badges.
8 badges.
Engaging of trade.
I'll test you later again. MCQ.
Yeah.
Okay, now gross income from a business. Okay, that means when you talk about this idea called gross income, what is gross income? That is over here. Remember this diagram I showed you before? Now, be aware you got gross income, less allowable expense, less double deduction, less special deduction, correct? There was another way of presenting this. Remember, you can start with PBT, yes or no? Just remember, PBT, then, well, you remember how to handle that, right? If you have PBT means you start with PBT, then you plus back your non-deductible expenses, yes or no? Okay, then you minus out non-taxable income. Does that make sense? So non-deductible expenses, minus out non-taxable income, got it? Then you might minus out double deduction one time, okay, and then you might minus out special deduction, then equals are you okay with this idea? Can I? So non-deductible expenses, what are non-deductible expenses? That one you should identify lah. Follow? Non-taxable income, identify, double deduction if any, special deductions any, alright? You come to adjusted income, then you come to the same formula here, adjusted income already. Follow? So after you got adjusted income, what happens? Adjusted income plus balancing charge minus capital allowance minus balancing allowance. Are you okay with that? Minus agricultural allowance. Okay, I'm going to just make sure you understand. You got also charge, got it, minus you already studied all of this already, right? Industrial building allowance, agricultural allowance also I taught you already, right?
Yes.
So now you know that part already, yeah? You studied it, you already know about it. Are you clear? Then
Yes,
you also might have industrial building charge, okay, or minus of
Industrial building.
Are you okay with this part? Equals, what is that? Statutory business income. I'm going to just tell you it's business income. Got it? So, this part here is usually the major 15-mark question. I think 20-mark question. Okay? It's focused on this only. Repeat. And you know this part? The one that you see all these allowances, that's 15 marks. So I already gave you 15 marks already, how to get 15 marks. The exam question will be asking you to calculate allowances. Are you okay or not? So the video that I put there is actually 15 marks. Okay? You need to know how to handle it, alright? Okay, now, moving on. So back to this. So when we say gross income, that's the revenue part, okay? Gross income from a business, you've got revenue recognition. Now all revenue accrual basis for sales. Understand what I mean? Accrual basis for sales, yes, no? That's what you normally do. Advance receipt on the year of receipt for services. Okay, pay attention to this one. If you receive money in advance, what is example of advance receipt? Okay, advance receipt means example of advance receipt. Okay, I'll give you an example. Okay. How do you think if you did the accounts, you will recognize the income? Okay, you're doing FAR 4, right? Very good. Have you studied MFRS 15 or IFRS 15?
Repeat it.
Huh?
Repeat it.
IFRS 15.
IFRS 15, MFRS 15. Dah study no?
We don't remember what the title, sir.
Revenue recognition.
Oh, revenue.
Contract.
15, yes.
Revenue from contract. Dah study no? 5 step.
IFRS 42.
5-step process.
Yeah, I think for recognition, I think.
Okay, revenue recognition got. So now I'm going to ask you simple accounting question.
Oh.
Debit bank, credit where? For this one.
For this one. Resolution the golf club at 80,000.
Debit bank, because I got the money. Credit where?
Credit.
Golf club.
Credit AR. No.
Hello? Are you searching online?
80,000.
Are you asking ChatGPT to help you? Hello? Debit bank, credit where? Customer. Huh?
Prepaid, because it's prepaid.
Prepare revenue. Deferred income. Semua hilang.
Then, after that, every year what you do?
Recognize income.
How? How you want to recognize the income? What's the basis? Anybody know?
Credit revenue, sir?
Yeah, I know credit revenue, but macam mana?
Macam mana?
Is it all 80,000?
No.
How much? What do you think you have to do? You are the golf accountant. How you want to spread the revenue? Based on? Year, month, obviously. How many years? How to decide?
Based on how they when we revenue here or she subscribe.
She subscribed this year. Lifetime. How now?
Oh, lifetime.
It's lifetime. So how?
Lifetime is
Anybody know?
Sebulan dia bayar.
Dia tak bayar sebulan, dia dah bayar sekaligus dah. Apa lagi nak bayar lagi?
bad debt.
Apa lagi? How? Based on?
Estimated life of the customer.
Macam mana dapat?
Very good. How to estimate the life of the customer? Anybody know?
Yes.
God,
I don't know.
there is a guy in this world, or there is a profession in this world that is more square than the accountant. Actuaries.
Ooh.
More square than the accountant. We are square, but they are squarer. No, at least when we talk, we look at other people's feet. Accountant, they don't talk at looking at your face one. They look at your feet. Then the actuaries look at their feet. So you must get a.
So this one can be applied as well with insurance
Huh?
Same as well with insurance as well.
Something similar lah. This is how the golf club is supposed to recognize revenue, and this is how they recognize revenue as per MFRS. This is the rule. This is the way. Now, IRB don't like. What did IRB do? IRB very gatal, take this company to court and say, hey, I want 80,000 this year. You get 80,000, you declare 80,000 as income. Understand what they did?
Yes.
So they went to court. When they went to court, court say income is recognized how?
1 year of the receipt.
Actual basis for sales.
Accrual basis for sales. Yeah. Court say it was accrual basis. Now, when they say it is accrual basis for sales, what happened was IRB lost the case with the golf club. Lost the case. After they lose the case, IRB always very cha-cha, will go and change the law. They went and changed the law and said, advance receipt on the year of receipt of service. Does that make sense? Which means, following year, the golf club must report all lifetime membership the year they get the membership fee. Does that make sense?
Yes.
Clear? Not clear? Okay, Now, the next one we have here, release of debt. Okay, so understand what's mean advance receipt really? Yes, no. That means the golf club usually recognize their income. That's what they get taxed on, based on their accrual accounting lah. Means what they account is what they report as income in their tax. But once they change the law, advance, this is called advance receipt. All 80,000 is taxed when you get the 80,000. Understand what's the meaning of all 80,000 is taxed when you get the 80,000.
So sir, after IRB changed the rules, so when the golf club receive 80,000, they are charged
80,000
80,000 tax.
tax. The income is recognized as an immediate gross income.
Kalau before that,
Before that, they can overtime.
so meaning kalau contoh in 1 year, the deferred income yang they recognize around 2,000 tu, so 2,000 dia charge on.
2,000. That means this was supposed to be like maybe 5,000 every year, let's say. So they only recognize 5,000 every year. And then they get taxed on the 5,000. That's how it's supposed to be. IRB want the money upfront. But they have made a very big complication because of this. There is a big problem that exists that nobody has addressed yet. Correct? But there is a problem because I'll tell you the situation again in a while. Okay. Okay, let's have a look at this situation here. Scott, so remember, advance rental treatment and for sales, they treat it the same way. They treat rental income and also the sales income for services same. Okay, now, advance rental treatment receipt basis. Scott, who runs a business of letting property, received 4-year rental of 480,000 for its tenant in 2018. So, pay attention. What will the company have to do? All the company have to do now? They have to recognize the income immediately. Does that make sense?
Yes.
They have to recognize all 480,000 in the year they received it. But in accounting, you actually recognize 120, 120, 120, 120. Okay, are you clear the difference between accounting and taxation now?
Yes.
Okay, so I'm just going to do the question here, Scott.
income that you receive will be taxable on the first month. This is $480,000 with tax in 2018.
Understand?
There's the income that is recognized in the accounts will reverse out as non-taxable income.
Because it's not taxable, it's taxed one time anyway. Every year you recognize 120, 120, 120, no more tax. You don't report rental income anymore already. No rental income in 2019, 2020. Got it?
So to calculate the tax, they need to take the total income.
They put the 480,000 in 2018 straight.
Oh, okay, sir.
All rental income to tax straight away, one shot there. Ah, you clear.
For that in
So
2010.
in 4 years, sir, they only pay once tax.
It's bad one because remember, if you're an individual, what happens to you? You hit the high tax rate immediately. If you're a company who is 17%, you cross to 20. You can cross to 24% very fast because of this. Does that make sense? Okay, clear. Clear. Okay, now what happened the next? Okay, you can see in February 2020, tenant terminated the contract and 220,000 will be refunded. Okay, so you can see this idea, okay, that there is a termination later on, yes or no?
Yep.
There is a termination later on. So if there is a termination later on, okay, so we're going to now look at this part. Okay? Any questions? Yeah. Okay, do you understand what's happening here? Yes, no?
Yes, sir. So,
Ish.
sir, kita dapat balik 220.
No, you don't get 220. Is you minus up 220 as an expense times 28% or 24%, whatever the rate of tax. Understand? So imagine here you had to pay 480k times 24%. Okay, here you get back 220k times 24%. It's based on 2018 tax rate, not based on the 2020 tax rate. It will be based on what you pay in that year. Are you clear? Follow.
So the tax will be same like last year or follow the current?
No, it follow the year you pay the 480. It doesn't care what's the tax rate now. It follow the tax rate when you got taxed. That is the meaning of retrospective adjustment. Retrospective means you balik to the place, you go back to the place originally.
So it's on 2018.
It's based on, assume you got it in 2018, but it's done in 2020. Are you clear or not? Because there's nothing in 2020 and 2019. Remember, there's no income. We already say 0, 0, 0. We only got tax in 2018. So if you have to pay a refund in 2020, you have to pay a refund. The refund relate back to that one. It relate back to the 480 you got earlier on, which was taxed here. There was no tax in between already. So you go back, you calculate here. Make sense now? Can. Okay, okay, let's move on. Okay, so refundable deposit is excluded. Okay, just remember, refundable deposit is excluded from tax. Release of debt, if any release of debt, okay, the meaning of release of debt, okay, you do need to know what's the meaning of release of debt. Okay, when we say release of debt means somebody doesn't want you to pay them anymore. They give you like, no need to pay me, let you go. Okay, so when that happens, pay attention. Okay. Okay, let's say this happened. Okay, pay attention. You buy a machine, you buy a maintenance, you buy a license. Okay? You purchase this in 2020, nothing was paid. Okay. 2022, they gave you a waiver, don't need to pay anything. Everything let go because it maybe got acquired by another company, which is the parent company, and then said, okay, this whole debt is forgiven, like no need to pay to this person, no need to pay. Are you okay? So in this case, how is the income tax treatment of the issue? Understand? So first of all, machine, claim,
capital allowance for the machine,
Does that make sense? Good. Remember the three words? Used and owned by the company. Does that make sense? Remember the three words? I owe you.
Okay. Yep.
So you can recall, right? I owe you.
Yep.
Incurred.
Use and own.
Used and owned. Clear? Okay. Now the next one.
Sir, the rate, is it in the exam?
Yeah, it will be given to you. Maintenance.
Maintenance is a tax deductible expense that will be deducted over the 2 years.
Okay. Follow up. Can I? Before this cannot. Okay. Can I? Before this cannot deduct. Now can. The tax is always a very fluidic thing. It keeps changing all the time. Okay. So the next part. That's basically the machine, the maintenance. So this is basically individual. I'll just call this individual items. Okay. Now, understand what's the meaning? Okay, waiver. Are you clear as much? Why 4 million? Okay, pay attention. Why 4 million is because 3 million you claim capital allowance. So now you get waiver, you have to pay tax for this. Okay, maintenance 1 million. Yeah, it is something you claim tax deduction, therefore you have to pay. If you don't pay, you recognize it as an income. Okay, the last 1 million, no tax. Not deductible, so no need to be gross income. So are you clear on how to get the 4 million here? Okay, note that. Make sure you're clear how the 4 million appear. The 4 million is the machine and the maintenance, but not the license because it was not deductible. But now can, now can,
Now onwards, sir.
now onwards can. So current exam, coming exam, careful a bit. Can be deductible. Okay, it's new, so they just approved it in the most recent budget. Okay, right. Can I move on?
Okay, sir.
Okay. Next one. I will try to keep you at the most updated budget, which is the current budget, 2020 budget. Okay. So we'll try to run on the 2023 budget, not the previous budget, 2022. Okay. Now, are you okay with these words now? The sentence, are you clear in this box now? This box, are you clear now? Understand? Okay. Now, withdrawal of stock for personal or non-business use The amount equal to market value at time of withdrawal is gross income. Okay. If you take stock for your own use, remember, if you take stock for your own use, it becomes gross income.
So taxable.
So if there is something called, well, in accounting, what do we call own use take out stock?
Drawing.
Personal use.
Drawing.
Drawings. Apa ni? Oh, pakai semua je hantam ni ya. Drawings. So inventory drawings. Well, in accounts you call it drawings. The end. Are you clear now? You can charge it to cost of sales. You can charge it to cost of sales. Clear? So debit cost of sales, credit drawings. Done. Finish. That's all. But for income tax, the cost of sales say let be, but the word drawing they automatically say recognize as gross income. Okay, are you clear on this part? Okay, can I repeat again? If you take goods for your own use, it's called drawings. What's the accounting entry? Debit, cost of sales, credit drawings. Done. What you credit at the cost of sales, yes or no? Yes, no? But for income tax, it's not like that. They see goods drawn for personal use, recognized as gross income, deemed sales. Understand what I mean? Deemed sales.
Kita guna tapi
It's still sales. Sell to yourself.
Then
Recognize the profit, pay tax. Are you okay with that? Of course, this is only the really honest people do this lah.
So the drawings,
Okay, drawings of
the
goods
figure
for own use will be taxable, will be deemed gross income. Okay, understand or understand this one?
There's no adjustment because of sale. Wholesale goods. C6 RM 100 goods.
What's the impact? RM?
I'm 500. 600. Why? 1 times 1.2.
Yeah, 1.2. Are you okay with that?
Times 1.2 cost plus markup.
Can I?
But the cost of sales of 500 will not be adjusted.
So the cost of sales is cost of sales because the accounting entry is debit cost of sales 500, credit drawing 500. Done. Done. Then for income tax it's like, oh no, this drawing recognized as gross income 600. Clear now?
so kalau in taxation, we sell our goods plus what we take, macam
Yeah.
use.
Yes.
So then times with the tax rate.
No, minus the $100, whatever tax lah, it's showing adjusted income already. So that's why I gave you this formula first. Remember, I was showing you this formula for a reason. So now you notice PBT, you may have to add back extra taxable income. Understand now? You have to add extra. I have to put it in another one. Plus extra taxable income. income. Does that make sense? The extra, this like this 600 goes in. Are you clear now? It goes inside here as extra taxable income. 600. But if you did this statement, you go and adjust here. You add here 600. The gross income must plus 600. But if you do from PBT, you just add 600 in. Okay, are you clear or not clear now? Can So that should cover this sentence. Alright? Okay, next one. Dividend and interest income can be classified as income for investment company. For investment company. Stock in trade sold by compulsion. Okay, do you know what's the meaning of compulsion? Forced to. Forced to. Who forced you to sell? Maybe the government. Government forced you to sell the goods. Are you clear now? So that one also is income. Bad debt recovered is income. But make a note, Can?
When the original bad debt was deducted as an expense. However, bad debt recovered from purchase receivable will not be classified as income.
Okay, two parts here. The word bad debt recovery means basically what happens?
Customer pay
Customer pay back the money that last time you write off already. So debit what, credit what? Debit bank, credit bad debt recovery. Done. Okay, not. And when you do that, bad debt recovery is actually a income. Other income. Yes or no?
Yes.
So what? Other income what? Your gain what? You already got back the money, it's a gain. Okay. So are you clear that one first? Okay. Now, which means it's credit to income statement. So it will be taxable. However, income tax will say, originally did you deduct or not? Because to deduct bad debt, got a lot of procedure one. So sometimes some company won't do the deduction. They just simply just bad debt, but they don't deduct the expense because they don't fulfill the criteria. If they never deduct, then the recovery is not taxable. Originally never deduct the bad debt, then when you recover also is not income. Yeah, are you clear in this logic? Can Or you buy a company, acquisition. So when I acquire the company, I get some receivable. That one go back, cannot. That one you cannot deduct. But when you recover, no need to declare as tax also.
But replace kat those income.
Pay attention, I buy a company. Let's say she's the company. Inside her got receivables. Okay, she already bad debt already. She already gave the expense. And then she sell the company to me.
Okay.
I buy the company. Now once I get the company, I have her company already, acquired. Now acquire all the receivables, everything already. Okay, I take over all your customers and all that. Then the customer come back and say, oh, I will pay you back. When that happen, the payment I get will not be taxable. Because different company. Different owner. So when I bought the whole thing, it's a capital purchase. Capital purchase. But the same thing, if any of the customer go bad also, I cannot claim deduction. Just not my customer, not my business income.
But sir, but again, will they actually still be bad debt recovery or under other thing?
It still be bad debt recovery under my accounts. It still be bad debt recovery, but income tax treatment different. Okay, are you clear this concept of bad debt? You know, it can change whether it's taxable or not taxable.
Yes.
Can usually bad debt recovered, if you deduct it, it becomes gross income. Default. Okay, are you clear meaning of default? Default treatment is bad debt recovery is income.
Okay.
Unless one, you never deduct originally, two, you purchased it. Okay, are you clear the two conditions now?
So what is the scenario about you we deduct earlier?
You deduct earlier, what do you mean?
Example,
Bad debt, that means it's bad debt.
bad debt. Oh, so we already deducted bad debt, then we got bad debt recovered, so we recognize.
Recognized as income.
Okay.
If you deducted before as an expense and charge it to income tax, then when you get back the money, you must report as income
Oh,
because you already claim expense already. Follow?
further.
Now let's move on. Insurance recovery. Insurance recovery. If insurance pay you money, it can be classified as income. Depend what they pay you for. Depend what they pay you for. If it's revenue in nature, you classify as income. If it's capital in nature, it's not income. Okay. Compensation received for breach of contract. If somebody breach contract with you and pay you compensation, you sign contract, then they don't fulfill the contract, then they pay you money, correct? That would be classified as income. Discount, commission, exclude those related to fixed assets. So you get a discount or a commission, that is also income. Okay. Are we okay with this? Right, now, other income, remember this is other income treated as gross income. Insurance receipt, if you deduct the premium for the insurance like fire insurance, you deduct the premium, you must, when you get back the money, it becomes a income. Are you clear now? Okay, yeah. Professional indemnity insurance, PII. Do you all know what is PII? Heard of it? This one is insurance taken by accountant, doctor, lawyers. They must take this insurance to do the business. This is when there is a negligence claim. When people sue you for negligence, then the professional indemnity insurance will pay. Example, you know 1MDB?
Yes.
Deloitte and KPMG, the firm had to pay $80 million to the government
Why so?
because they were negligent. They audited and gave the wrong opinion. It was the wrong audit opinion. The company was rubbish. The company auditor said everything okay. Are you clear now? Because they said everything okay. Later, the government said, yeah, you're negligent. Now pay me $80 million. So when they had to pay, the whole firm had to pay. All the partner had to pay $2 to $3 million US dollar, because US dollar, you know, $80 million US dollars, which is a lot of money, because they said it was 800 times the fee. 800 times the fee they charge. The fee not so high, but they ended up paying $80 million US dollars. Okay, it's a lot. Okay, when they paid, of course the partner never paid themselves. Partner paid themselves bankrupt. All the partner bankrupt. Insurance, professional indemnity insurance paid.
So how about if let's say that like a sportsman, a sportswoman who insures their hand, something like that?
That one is not professional indemnity insurance. That is accident insurance and all that. Professional indemnity is for like doctor make mistake, you sue the doctor, you can sue the doctor for millions, you know.
But the doctor won't pay.
Doctor won't pay, the insurance will pay. Does that make sense now? Okay. That one, all the time is taxable. Okay, it's all the time taxable. So if you get any money, it's taxable. Loss of cash allowed as tax deduction. Okay, understand what I mean? Loss of cash, right? Cash being stolen.
Oh.
But make a note, except for director. Just remember, except for director. Director can, director of the company can say like, oh, I took money, happen. I took money. Just like I remember one of the company directors, he took 100,000 to pay the workers. 100,000 to pay the workers. He put in his car. He stopped, go take tarik in the shop there, come back, the car broken, 100,000 gone. Huh? Cikgu also kena, is it for you? Okay, now when that happened, it's called loss of cash. It doesn't matter you make police report lah, I got stolen lah, all of this, not deductible. Not deductible because director. If employee, different story. Employee okay. Director cannot.
Why director cannot, sir?
Director can always claim they lost the money, right? And then put in the pocket. The guru besar can always say lost the money. And then go in the house there, it's in the house. You cannot. So the idea here is it's always possible that claim can be made. So IRB don't let director claim loss of cash. Employee means can.
Similar case with Hana.
Which one?
Terminate. Give it back to. Oh yeah.
So that's basically it. Okay, now the next one, bad debt recovered when original bad debt was a deduction. Okay, that one you already know. I already put here already. Okay. Okay, done. That was about.
So it is only the deductible for employee.
Yes.
Right? Oh, so for director it is non-deductible.
Yes.
Yes, sir.
So if you recover any money from loss of cash, you can also classify it as gross income. But if it was director, you recover, it's not gross income. So I want to make sure you're clear. Loss of cash allowed as a tax deduction. Recovery is taxable. Okay, you know what that means, right?
Yes.
You lost the cash, you get back is gross income. But the loss of cash was deducted. Okay, are you clear on this one? But if the loss of cash was director, cannot deduct. The recovery also not taxable. Okay, clear on that sentence now? Okay, now let's move on to the next part. Business income derived from Malaysia. Okay, what's the meaning of business income derived from Malaysia? Derived in Malaysia if it is carried out in Malaysia. It could be manufacturing, could be growing, could be mining, could be producing or harvesting in Malaysia, and it could be sale outside Malaysia, deemed derived in Malaysia. It's usually based on market value at time of export, deemed gross income. Non-resident trading in Malaysia, if operations in Malaysia, it will be subject to tax. Okay, keyword. A non-resident means what? Somebody who is based overseas. Are we clear? Somebody who is based overseas. A good example, recently, who came to Malaysia and danced? Blackpink. Okay. Blackpink came to Malaysia. Now, when they came here and performed, should they be taxed?
No.
Yes.
I guess
Should they be taxed?
they shouldn't be taxed because they are not resident.
Doesn't matter how many days. Whatever money they earn here, they have, the person who give them the money must withhold tax.
Oh.
Because they are called performer. It appears here.
Oh my. So we need to see their profession first.
Yes, you have to see their performance. Over here. I show you where. You can go to page go to page 35.
Wow.
So whatever Blackpink earn for their event in Malaysia, whatever they are being paid lah, whatever they are being paid, 15% must cut. The person who pays them must cut 15% and pay. Are you clear? Not Blackpink pays lah, but technically Blackpink is paying lah.
Oh, alright.
You're cutting their payment 15% and give to them. Of course, Blackpink might have argued and said like, I want this much, I don't care how much, you pay the top.
Oh.
So that's why you have to be careful.
So is it the tag is passed down to the the audience, the customer?
Obviously, right?
Obviously.
Obviously, right?
It's like SST.
Because they don't want to pay the tax.
They don't want to pay tax. They just want so much money. I say like, I give you so much. I'll come and dance for so much money. Your problem. Organizer problem. So as an organizer, you must know compliance. I must pay 15% and I pay them. Does that make sense? So those are things. That means they have operations in Malaysia. The idea, as long as you have operation in Malaysia, you get tax. Okay? So the idea of operations.
So you said that we need to look at the profession. What if what are the example of profession?
No, there is a list.
There's a list.
There's a list.
Oh.
Okay, now let's get back to this part.
Do we need to remember, sir?
No. Whatever in this note.
So the way you say about withholding tax, is it the same like the sales and service tax right now, where
Sales and service tax is different. Withholding tax is different. Different law, different law. Withholding tax is under income tax. Sales and service tax is under sales and service tax. Different law. One is indirect tax, one is direct tax. Are you clear on the difference? So there are different laws and different principles. So over here, now have a look at this part. Facts to consider whether there is operation in Malaysia. Okay, whether there's an operation in Malaysia. Where contract is, if the contract is done in Malaysia, it's got operation in Malaysia. Title passed to buyers in Malaysia. There's an agent appointed with stock to be hold, or there is an idea called permanent establishment, which you will study later. Make a note, this one is in chapter number 2.
Oh, okay.
Later we'll study that in chapter 2. Got it? So don't worry about this one for now. Now have a look at this question. Stark Senenbahan, who runs a business of manufacturing cosmetic, has a cost of sales of 150,000. Transfer all goods to its branch in Indonesia for 200,000. The Indonesian branch sells it for 270,000. State the treatment of the above in gross income, whether this would change if there is no Indonesian branch. Okay, let's go through one by one. Would this change? First of all, how is this going to be in gross income? Do they recognize 200,000 or 270,000?
200.
They should recognize, so start. Just do start right now.
Recognize RM selling 200,000 as gross income. But you have to be reviewed to ensure it meets transfer pricing regulation.
Okay, make sure you answer on this transfer pricing regulation. The idea of transfer pricing regulation, okay, in Malaysia, we have something called or we call it harga pidaan lah, alright? And you know it's a department in the audit firms, right? In the audit firms,
Yep.
they have a department for transfer pricing, and the job of that department, you just study everything here. Okay, you learn every single, right? You study all of this, and you become specialized in this, and you sit there and deal with companies' transfer pricing. That's a different department from the income tax department. Especially specialization. So transfer pricing is a specialist department. Corporate tax is a specialist department. Individual tax is a specialist department in the Big Four. Don't go to that cacat audit firm. Small firm where everything is rojak. Okay? The big firm is specialization. They will let you specialize. So this is a specialist area, and if you're going to be interested in transfer pricing, you have to master everything here. Okay? Okay. Usually, if you're going for the tax, the audit, the tax challenge and all that, somebody must have a transfer pricing. It's a group. If you're doing group work, somebody must master transfer pricing. Somebody individual. Somebody does corporate. Are you clear? So then, when they go in, they have their so-called specialization skills. Okay. Now, moving on. So that's the point I'm writing here. Ensure it meets transfer pricing regulation. Got it?
The country will be taxed in Indonesia, and the country remits the profit back to Malaysia. The profit will still be taxable in Malaysia with double.
Go. Okay, okay. What happened? Are you sure you're okay?
The country remits the profit back to
Will be
Malaysia.
taxable in
The
Malaysia.
profit will still be taxable in Malaysia if possible. Bilateral tax.
Have you heard of bilateral tax relief? Never heard of it, right?
No.
No,
What is it, sir?
Bilateral tax relief is something you study in chapter 2 for international tax.
Oh.
That means when you deal with countries, different countries, because Malaysia now got double tax already. Yeah, we are now double tax. We are now in the world of double tax already. Before this, we didn't bother about double tax. So this word bilateral tax relief is now a big word. Got it? It's a big word, and it is something that you have to have knowledge. And you know, right, where you learn. If you want to learn tax, where do you learn all the tax specifically? LHDN, where? I know, of course, a website, but where? Where in LHDN? You go to
What is bilateral tax? Google.
you go to garis panduan. Not here. Go to wait. Type LHDN public ruling. You go to this place. Are you clear? This is actually the textbook. Okay, repeat that. This is actually the textbook.
Wow.
Let's say
But I won't test everything here lah. I'm what my notes are is trying to summarize what's inside here. But
different here lah.
it's everything you want to understand about tax is in here. Are you clear now?
if they say kalau based on the case study just now, right? If the branch not settled,
That's the point. That's the second answer.
oh,
Okay. That's why the question said whether this would be if there's no Indonesian branch, correct? Okay, I haven't come to that, but just telling you where to find things like. So you see here, for example, how to tax limited liability partnership. They give you the guidelines like what to do. How to do accelerated capital allowance, venture capital tax, anything there. Tax incentive for organizing conference in Malaysia. Anything you have to learn or do is actually coming from here. Time limit for unabsorbed adjusted business loss carry forward. Follow? Okay, so let's come back to this part. So if there's no branch, what happens? Done. Can? Can? Oh, sorry. I always forget.
Then the branch
I thought you also typing. January.
So, the 270 gross income most so dia kena double tax lah, Indonesia and Malaysia.
The previous one, you'll get double taxing. You'll get tax in Indonesia. Pay attention, The 270, the 70,000 profit will be taxed in Indonesia. When they return back the money to Malaysia, they get taxed in Malaysia again, 70,000. This is what we call double tax. The 70,000 get taxed 2 times. Because the 70,000 get taxed 2 times, not very fair, they have something called bilateral tax relief. It's a special relief when you get double tax. Okay?
So it's waiting no branch in Indonesia, does it?
Do that?
It's waiting no branch in Indonesia because
Then you get tax only in Malaysia lah. Of course lah. Okay,
Oh, so
but the customer might not want to buy. How now? You want to set up branch or don't? The customer says, I won't buy with sell from Malaysia, I want from Indonesia. How now? Now you have to weigh the benefit of setting up the branch to get the sale. We don't set up, you want to sell directly, if they don't want to buy, maybe they buy from someone local. Are you clear the issue? So looks don't automatically make judgment on money, on tax alone. There are other reasons for things to happen. Can Okay, right, let's move on.
For example, like MYTAX lah kan sir, they have many branches.
MACD have a lot of branches, correct?
So they can apply bilateral tax relief.
No, theirs will be completely different. Theirs is completely different. MACD is a franchise. It is a completely different story. So worldwide, so they have a different strategy. Don't worry, MACD, their tax are really good. McDonald's, their tax management is very high level. They know how to manage it. Google, you know how much is the tax they pay? 0.1% for foreign income.
Oh.
That's lower than you also. Okay, you might have a little bit tax because you're paying sales tax here and there.
Yes.
Google pays very low tax because they have tax specialists. Okay, they will know how to move money around. Alright, so let's move on. Okay, the next idea you're looking at is something called commencement of business. Okay, commencement of business. When does the business commence? Okay, this is critical since it affects basis period. Amount of pre-commencement expenditure and set off for capital allowance. So you do need to know when you start affects all of this. So for a business, retailer, when the outlet is open, that's when they start business. Okay, pay attention. Commencement of business, not the same as incorporation of business. Incorporation is a company law term. Commencement of business is a tax term. Are you clear on the difference? You can incorporate now, but never do business, so no tax. No tax issues. When you open your outlet, that's when the tax starts. The business has started. Okay, are you clear on this part? Manufacturer, when you start is when you receive the raw material. Okay. When you acquire a business, the date of acquisition is when you start. Hotel, when the room is open or the restaurant is open. Either one. Property developer is the date of the project. Okay, are we clear on this part?
Yes.
Okay. If a business cease and a new business start, you close one business, you start a new business. Any capital allowance for the old business is lost. We call it ring fencing. It is fenced for that business. So if you started, let's say, stationery shop, you close the stationery shop, you open a coffee shop. Understand what I just did? You open a stationery shop, you try to sell stationery, nobody buy. You close your stationery shop and you open a coffee shop. Now, all the capital allowance for the stationery shop, gone. Cannot be used in the coffee shop business. Although the same company name. Same company name.
Unless it is subsidiary, then it's different.
It doesn't matter subsidiary. It's you're talking about you close this business, open a new business in the same company. Once you close the business, whatever capital allowance for that business, stuck. If you never use, it's there. Never use lah. Carry forward. Okay, are you clear on the meaning of that idea? Now, whether a person extend the current business or start a new business is based on looking at the interconnection of the business. Now, let's say you have fast food selling burger, then you open coffee shop. Is it same business or is it two business?
F&B.
Same
Interconnection.
business.
It's interconnected, right? Same customer, staff also almost same premise, just new product. So you can then classify it as same. That means you are just what we say, extending a current business. Therefore, capital allowance all can still be shared, still under the same package. But if you consider starting a new business, you split out. Then there's a required to split and report two separate business. So that means you have two statutory business income. Business 1 income, business 2 income. You have to calculate 2 times. So one company, one account, two tax account. Understand what I mean by two tax account now?
Company one account, two tax account.
One for business 1, one for business 2. For accounts, you do only one account. Everything got debit credit inside there.
Oh, faham.
But when you want to do for income tax, must split. Okay, are you clear or not? That's why there's something called tax accountant. The job of the tax accountant is to maintain the two accounts for the company. Are you clear now? Make sense, huh? So the more businesses a company has, the more you have to split, prepare the accounts. You draw from the same accounting data. Okay, are you clear now? Make sense? Okay. Now, interconnectedness you can learn by looking at IFRS 8. I don't know whether you studied IFRS 8. Operating segments, reportable segments.
Yes, we
Okay,
studied.
yeah. So one of the ideas in IFRS 8 is to look at similar economic characteristics for aggregation purpose. You can aggregate if they are similar economic characteristics. What is a similar economic characteristics? Well, you have here number 1, distribution is the same or not, regulation is same or not, product is same or not, production is same or not, customer is same or not. Got it? If they are all similar, you can join them up. If they are all dissimilar, you show them as two business.
Sir, would you explain to me once again? Can be aggregated?
Aggregated means one business.
What is it?
Fast food restaurant, burger and coffee shop, one business.
Oh,
Okay? Stationery, coffee shop,
okay.
two different business.
When the tax.
Tax also two business lah.
Oh, kalau yang campur tu.
Campur tu
Account.
just one.
Account.
Prepare one tax account only. So coffee shop, burger shop, one account, one tax account. Coffee shop, stationery shop, two tax account, two statutory business. Are you clear now?
Yes.
Okay, Expense incurred before the start of the business can be preparatory expense, such as getting approval, initial marketing research, feasibility study, incorporation expense, you buying a franchise. This is usually disallowed. That means any expense before you start the business is usually not allowable because you haven't started business. So whatever expense is cannot be deducted. We call that preparatory expense. Are you clear? However, there is special case. Now, what's a special cases? Okay, these are the special cases. If it's an approved business venture, you can deduct. This approved business venture, special case. Down here you can see. This one. Change name here. This one salah. This one, hold on. Cancel this one and call it
approved business venture.
this one. Link to this one. Approved business venture.
Oh, okay.
Okay, so what does it mean, approved business venture? Well, it means, number one, it must be a resident in Malaysia. The company must be resident in Malaysia and got approval from Ministry of Finance. Means before they do the business venture, they must get approval from Ministry of Finance. Then, whatever, this one, remember, they haven't started the business, you know. They haven't started the business yet. Got it? They just getting approval. They want to try to do the venture, so they go and do all these expenses and all that. So feasibility study, market research, travel fare, accommodation, sustenance of fund, all of this can claim as an expense. You can just collect all the expenses up. Treatment. This one you collect, can deduct after defined aggregate income. Available for the first year until fully utilized. That means this one is a special holding account and you can deduct in a very special location. You deduct here, somewhere here, after aggregate income. After aggregate income. Got it? So defined aggregate income is aggregate income and business loss for the current year, but before total income. Okay, this word, there's something called defined aggregate income. How do you calculate defined aggregate income? So you got statutory business income plus are you clear? Then minus are you okay this part? Define aggregate income. Follow this part?
Yep.
So aggregate income and defined aggregate income same?
Different.
Different. Got slight different. Got it? Got slight difference. You do need to know the difference. Got it? And this one is current year business loss. Follow up? Don't need to give you a break.
Yes.
Yes, great. So,
Yeah.
Yes.
Okay. Take 5 minutes.
so we will get the recorded lecture for this one also.
No, this one doesn't have recorded like this.
Okay.
Yeah, this one doesn't have recorded lecture. What I will record is certain parts and I'll give you a head, but these are not recorded, alright? When you miss lah. Please catch up lah. Are you okay now? Miss anything, catch up ah? Okay.
So, the formula for this one, for the aggregate income is statutory business income plus other statutory only, right?
Other statutory income is your rental income lah, your employment income lah. Oh, got so many, you know. Each one is one jalan of calculation. Each one is one separate calculation, all falling down. Even statutory business income is like business 1, business 2, business 3 all joined together. Then it calls statutory business income. Are you clear or not? Okay. I give you 10 minutes.
The formula is misleading.
I give you 10 minutes.
The formula untuk aggregate income yang ni kan. Yang ni dibandingkan yang ni kami ni dapat aggregate income. Lepas tu aggregate income pula tolak yang ni akan dapat yang ni.
So yang yang E1 bila tax sealer Deloitte tax sealer Deloitte tax sealer tu boleh bawa buku.
You can use your phone and all that, right? So
They will be online lah.
yeah, so you can bring your computer.
Oh,
So you can do your research there itself.
oh.
You can do research. But the first one, I think you have to submit based on what they give you. The first initial competition is you submit without going there. If you get win or you get selected, then only you go there, they give you the problem, then you have to research solution, come up with PowerPoint, present.
How many hours?
Kena present to 3 people. One is definitely from Deloitte, 2 from Deloitte, I think so. 2 from Deloitte, 1 from ACCA. One person will be from ACCA.
Writing is
Huh?
not to present.
Present, PowerPoint, not writing, just PowerPoint presentation. So how you present the situation, normally they give you client problem, and then the people who sit in front of you is actually the tax partner, the tax partner lah. The tax partner behave like client. So you must behave like tax consultant. You must role play tax consultant. The tax partner will play client.
So kena kawan Zoom.
I understand the idea now. So if you're okay, then you're okay. That's why I want to start to make sure you do this already at early stage so that you know how to do the presentation of it. I will show you the video. The video is
Yang mana dah habis business venture yang ni kan? Yang ada tu di mana? Sini kan?
see first.
Business venture. Yang tu tak jadi. Yang tu tak jadi. Tak jadi, kita tak dapat. Apa? Mana? Tak.